Good morning, MCL here with Stock Market Futures. It's about almost 9 o'clock and we're looking and the futures are up. Dow's about up 41, S&P's up about 4, NASDAQ up about 1. If you looked at the futures the last few hours, you would see that the futures were down a lot at one point. And last night, back like when it was about maybe 7 o'clock, futures were up. So we really started up, went really down, and right now the market's barely up. What's interesting is that all the indicators, oil is down pretty nicely. Oil's down almost 4%. 10-year treasury is down a decent amount. Copper's down like 2%. And the market, as I'm speaking, is also fluctuating between red and green. So we see the internals are not supportive of the market today, which makes us wonder how the market's going to play out. We need to be defensive when we see the internals not playing well. We also have this clear theory and understanding that when the VXX broke 33.5, which was a mathematical calculation that warns me about the general market, ever since then, the market's been very inconsistent and confusing. Last week we had 2 big red days for the market, then we had a reversal after that, and then we had another reversal after that. Then we had a 1,000-point rally the past Monday, and then we were down Tuesday, up Wednesday, down Thursday, and now the futures are sort of flat with the indicators not looking good. So we need to be a little more defensive now, or at least more careful. We shouldn't just be pie in the sky. We got to recognize that the market went up a lot. It went up over 30% in about 8 weeks. My understanding is most of the time markets don't roll over in a very significant way until we have about 12, 13, or 14 big weeks, which the market's in the middle of doing. It's been up about 8.5 weeks. And so far, the market hasn't a lot of these interruptions, these spike in volatility, but in general, volatility has been down. The VIX went all the way down from about 50 to about the high 20s in the past 8 weeks. So it's understandable that the market might spike. The volatility might spike up, the market might go down, we're not sure. But at the same time, we have to give benefit of the doubt to the market, to the bulls that have been in control in the past 8 weeks, most of the time, that they might get over this hurdle as well, even though all the internals are down. And Asia, that's another bad indicator. Asia's down. One of those Asian beautiful names, HRI, was down 5.5%, and the Shanghai was down almost 2%. Nikkei, whatever you want to call that thing, is down almost 1%. So we don't like when Asia is down because it could lead off to our market. Europe was down before, but now it's mixed. So we're really dealing with a market that's digesting a lot, that ran up a lot, ran up about 8% in a week and a half, and now is down and was down only about 2-3% within this week of fluctuation. So let's be a little more cautious today. I'm still holding, and I'm considering maybe taking more defensive action, like buying TVIX as a hedge if things start looking worse today. But I'm not really sure if that's the right thing. Maybe the right thing is just to hold. So I want to see how the internals do. So far, the internals we said are not good. If there's going to be any change in them to the positive, that will give me some reason to believe the market could handle a day like this. If the internals get worse, I might get more defensive. Okay, these are one of those days and we have to figure out next week is a holiday weekend. A lot of times holiday weekends, when they start on Tuesday, a day late, a lot of times that week is like an outside week, either a really big rally week or a negative week. So it could be up or down, very extreme. So we have to kind of keep all that in mind and recognize that the market right now is in not the best place after really being very impressive. So let's see how the market handles today, and I might get more defensive as time goes. Have a wonderful day. Good luck to all.